Welcome back, everyone, to this week's AMA from iAccess. Probably hearing a bit of an unfamiliar voice for the community, especially. I'm Shinti from the BD team here at iAccess InvestX, and I'll be moderating today's session. So coming to this week's AMA, it's a little different. We have some guests. We're joined by Stacks and Tiger Research, and of course Julian from the iAccess side to discuss none other than the topic of BTCFi, Bitcoin finance. And before that, just want to quickly thank Grant and Ryan as well for dialing in. I know last week they just gave a token to 49 update. It's been a crazy busy month. So thanks for taking the time to join iAccess's AMA as well. So coming into BTCFi, I think it's a term that we've been hearing all around everywhere. I think as Grant himself mentioned in Token 249 as well. But I think the reasons are valid and genuine on why it's being talked about so much. Because on one hand, we're seeing all these new financial use cases being built, and the other hand, they're being tied directly back to Bitcoin, which is the extremely secure, still preserving the decentralized nature. So I think it's this blend of innovation with the use cases side, the financial application side, and security from the Bitcoin side that I think makes BTCFi so powerful and pretty exciting as well. And of course, it's a shift in mindset as well. Everyone's starting to think differently. That Bitcoin is not just to hold, it's not just a cryptocurrency, emphasizing on the currency side, but instead it's to power like a new wave of financial innovation as a whole. And of course, digressing a little bit, zooming out, it's not just BTC-Fi, but Bitcoin itself as an asset, has emerged, dominated across various sectors this past year. I think mainly towards the institutional side. Whether that's, I think it started with the ETF allocations, and I think it's been called as TradFization of BTC, which is leading to all of these new financial applications emerging. But not just that, we have DATs, digital asset treasuries, with the whole Michael Saylor boom. And then, of course, regulations on one side has been advancing. The Trump administration, the US's Bitcoin reserves. And as recent as this last Saturday, I think they're calling it Uptober. Uptober, yeah. Because the Bitcoin has gone up over the weekend. So all this momentum, from various aspects, just going back to one asset continuously, Bitcoin. So I truly think it's understandable why we're hearing about this in such a great scale and why we should continue to talk about this more. I think especially more towards the infrastructure side. So behind the scenes, behind all the crazy news, the infrastructure players that are contributing to the ecosystem like iAccess or Stacks, really benefiting Bitcoin holders, bringing more utility to this asset class as Bitcoin. So with that, just to map out the discussion for today, we'll probably start with Tiger Research, to get a broader view of the BTCFi landscape, why 2025 is the year, which areas are gaining traction in the BTCFi space, are there any gaps, and then of course from Stacks and iAccess as well on what is the role that they're playing in this BTCFi landscape, whether for Stacks it's on the layer 2 programmability side and for iAccess on the real world asset yield side. And just to briefly introduce for those who might not have context on what Stacks or Tiger Research is. So Stacks is leading Bitcoin Layer 2 protocol, which extends Bitcoin's capabilities by enabling smart contracts and decentralized apps directly on Bitcoin without changing its core properties. Of course, Grant, I'll pass it over to you later as well to explain more. And same thing for Tiger Research. They are a Web3 research and advisory firm who has valuable insights across the Web3 industry, whether it's stablecoins, BTCFi, AI as well. They have comprehensive reports and insights for all players in the industry. In fact, I think Tiger Research just released a BTCFi report, which is very comprehensive. So if you haven't checked it out, you can read that for some good intel on BTCFi as a whole as well. And of course, iAccess, which our current focus is right, BTC Real Yield, which is helping DATs, miners, BTC holders access regulated yield generating opportunities through tokenized fixed income real world assets. So before diving in, can we have Grant and Ryan just give a quick intro on what you do at Stacks and Tiger Research? So maybe we can start with Grant.
Okay, thank you for running through. I'm Ryan from Tiger Research. We do the research and advisory services for the Web3 projects and about the industry. I read the research team and mostly cover about the DeFi, RWA, and the stablecoin most about the financial side. And it's like a Shintin talk about, we publish about the comprehensive report about the BTCFi. You can check out all the informations about the BTCFi on our website. It's all free, so please check it out. And if you have questions, let me know.
Sure. Thanks, Ryan. Pass it to Grant as well for a quick intro.
Yeah. Hi, everyone. I'm Grant. I'm on the business development team at Stacks Labs, and Stacks Labs is a contributor of Stacks. So it's an entity that is trying to help grow the Stacks ecosystem. And so on the business development side, I focus mostly on partnerships to extend the capability of Stacks and also on the investor relationships. So working with Bitcoin holders and trying to help them to access Bitcoin yield via the Stacks protocol. And yeah, shout out to Tiger Research. Their Bitcoin Fi report is great.
Thanks, Grant and Ryan. Yep, for that quick intro. With that, I think let's jump into our first question, which is for Ryan, Tiger Research. So I picked this up because I thought it was quite well said. In your report, you mentioned that BTCFi aims to do for Bitcoin what DeFi did for Ethereum. Could you explain more on this? Like firstly, how is Bitcoin's path to DeFi different from Ethereum's? And why is this next phase so important for Bitcoin's evolution? Secondly,
Uh,
yeah, over to you, Ryan.
Thank you. It was really good questions. Let me explain this very simply. Think about Bitcoin as a gold, incredibly valuable, extremely secure, but it's just sit there. We can't store it. We can send it to summons, but that's about it. We don't have nothing more about. So like Ethereum is like a silver that you can also melt down and reshape into the different tools. We can build the apps, like creative, like make some transactions, like smart contracts. That's all from the Ethereums. So there's a big difference between the two underlying assets. But here's a reality happens on the Bitcoin. Over 1 trillion worth of the Bitcoin is just sitting in the wallets doing absolutely nothing. We doesn't earn 1%, just zero returns from their Bitcoin. Like imagine we have a massive pile of the gold bars in the vault, but we cannot use it. It's worthless. So, but at the same time, on the Ethereum side, billions of dollars are actively earning money from the financial application like a DeFi. So here's a big difference happens from the BTC and the Ethereum. And BTCFi want to solve these problems. Um, we're not changing what Bitcoin itself. Bitcoin just stayed 100% same as before, like perfectly secure, just like a gold. But instead, we build a new system on the top of the Bitcoin. Like project like a Stacks let you do the smart things with the Bitcoin while keeping completely safe. Now, like Bitcoin holders can earn money through the staking, lending, and trading without the giving up the securities. Now Bitcoin finally works for you instead of just sitting your board or the wallets. The Bitcoin stays a pure gold as a bottoms, while all the things are earned happens in your layers above. So now on the Bitcoin, the ETF happens, and like 2 days ago, I saw the news that Grayscale launched the new staking ETF. So I feel like the Bitcoin ETF will find out the new BTC, like new earning systems like Ethereum, and at the same time, BTCFi can be on hype at the when the kinds of the like staking ETF happens on the BTCFi. So everyone have to keep your eyes on the BTCFi ecosystem like a Stacks or the IDEX.
Thanks, Ryan. I think that was a very beginner-friendly explanation. You're comparing it to silver and all, and also you've mentioned ETFs, Bitcoin ETFs. Where do we need to look out for? So it looks like the ETF space will continue to grow. Um, so I think you've already mentioned it, but now moving in, I think your report expanded into different layers as well. You broke down the whole report into a few layers on where BTCFi is picking up. I think it's the infrastructure layer, settlement layer, so where Bitcoin L2s, sidechains, and rollups handle execution, the custody layer, asset layer, where BTC is wrapped or staked to move into DeFi. And of course, on top of that, protocol layer, where all apps actually start generating yield or credit against BTC. Really like the way Tiger broke down into these different layers as well. It's easy to understand for a beginner. But across all of these different layers, which of these areas do you think is showing the most progress or a lot of activity? Whether it's the infrastructure layer or the protocol layer, I think which one do you think is picking up a lot, and what are some limitations from some of the layers as well, like maybe that's not really developed yet, that you think could be built out in the future?
Thank you. First of all, if everyone can understand what is the layers like infrastructure to the protocol layers, you guys have to read the research first. But in here, I will tell the like very simple answers about the each layers. But here, like infrastructure layers is the most valuable one because, but about the Bitcoin itself, it's just the Bitcoin layers. We don't have any the infrastructures or the applications about the Bitcoin yet. So infrastructure is the most valuable one that made the Bitcoin working like Ethereum's. So it is the most valuable one. Like um if I can answer, if I can explain about the infrastructure layer more simply, infrastructure layer is a provider providing the networks and the system that let the Bitcoin do more than just sit there. It's like a stacks connect the Bitcoin to smart contracts while keeping the Bitcoin secure. So this is things like infrastructure layer working. But um, the challenge is the system doesn't connect well with the each other layers yet. A lot of applications have to build above it. So about the protocol layers, this is where actual financial services happens, like DeFi systems. Um, a lot of products are happens on the protocol layers, like Babylon's or Sol protocols. They already deposit the billions of the dollars, and IX is one of the like valuable players in the protocol layers. IX let users on the U.S. Treasury returns without just selling their bitcoins. They do the same things with the things. So to sum up, like an infrastructure layer is making the Bitcoin works as like a Ethereum, and protocol layer is a real services that enable the Bitcoin to earn some money. So these two things layers are really valuable one, but still, yeah, many holders doesn't want to leaving their Bitcoin as a products yet, and they doesn't know about the Bitcoin finance well. So I waiting for the some time like turning points that enable every holders knowing about the BTCFi systems and earn some money from it. I think like either when the like grayscales or other ETF companies staking their Bitcoin on the BTCFi and put their staking functions on the ETF, that will be the like turning point for everyone.
Thanks, Ryan. So you said mainly the infrastructure layer, which I think most of us would have expected as well. Just not just Stacks and IXS, but I think different providers are coming out, filling in different gaps in the ecosystem, and it's grown so much. And of course, I think I still come to say that even though there is a lot of news around, awareness might still not be the most effective so far, is what I understand. Um, so, okay, that's interesting. And I think you're continuously mentioning ETF on the grayscale guide. So we'll wait to see that. I think everyone can monitor that. So, yeah, thanks for that. With that, I think now let's move on to stacks and IXS. I think this touches a little bit on what I mentioned earlier as well. So, institutional capital going up, hash rate is up, lending, borrowing, all of this around Bitcoin. But just like a very simple question, how is Stacks, responding, reacting, feel about this? Because Stacks is, I think, very experienced from very early on, understood Bitcoin dominance. Even before BTCFi was coined, the term came up. Believe Bitcoin that it's not just for its value, it's not just medium of payment or transaction. It's so much more than that. Other than that being maybe a bit of a told you so. moment. But how does Stacks feel about all of this? And I think for Julian as well, what are your thoughts on this in terms of how did this lead to translate to BTC real yield from a RWA perspective with all this BTC momentum? So I think first I'll pass it to Grant, and then Julian can take over from there.
Yeah, I think Stacks has been on this Bitcoin finance game for a long time. And really it's been boiling down to something that Manib, the creator of Stacks, has said before, where Bitcoin started out focusing on money, where it took, it's taken 10, 15 years and really focused on distributing Bitcoin and getting people to think of Bitcoin as money. And you're seeing that more and more where people are putting Bitcoin on their balance sheet. Corporations are putting Bitcoin on their balance sheet. People are thinking of it as a treasury asset. And that's a really important point because getting that adoption and creating money is a very difficult thing. And so now that we've taken that time and Bitcoin is starting to be treated more as money, we're kind of moving into this next stage of now that you have Bitcoin on your balance sheet and you think of it as money, you're going to want to start to do some sort of finance with it. So you want to really, I think about it in like pretty simple terms. You want to borrow and lend your money, your Bitcoin. And that's really where Stacks comes in. We're trying to make it so you can do finance with Bitcoin. So just like really simply borrowing and lending and doing it without giving up custody is the most important part. Bitcoin has a fundamental limitation that there aren't smart contract capabilities on the layer 1. So you need these layer 2s to bring the Bitcoin to. So there is a smart contract layer where you can borrow and lend and do other more complicated things without giving up custody. So I think that's been Stack's focus now for years, and it's showing its value that the market needs some non-custodial ways to do finance with Bitcoin. So
Thanks,
Great.
Grant. Yep.
Yes, Cynthia, I'll jump in. Yeah.
Yeah.
Yeah, look, so yeah, everyone should check out that report for sure from the Tiger guys. Probably the best guys up coming out of Korea in the research. I've known them for a very long time. Ryan and the team up there. Yeah, Grant and I have known each other for the beginning, somewhere around I guess it was the Digital Asset Summit in March. I connected with the Stacks team, so we came into BTC for the first time this year because previous to that we didn't have a real use case for it related to real world asset tokenization. So our journey was speaking with a bunch of the big Bitcoin miners who have a lot of Bitcoin. They want to find yield generation, as do many different people. So discussion started earlier in the year, and then that took us to go and meet and look at research the BTCFi guys. So Stacks was one of the best in that space. Super interesting, super innovative. I'm just thinking, it's called BTCFi because it's trying to bring the DeFi services to Bitcoin, right? And then the rest of DeFi is just called DeFi. So BTCFi has been going really strong, I think. Some great volume growth around what's on offer. As it's DeFi, so most of the BTCFi are rewarding Bitcoin holders with yields in their DeFi coin or the layer 2 altcoin or the utility token, I guess is another word for that in some platforms. So I don't really use that much more anymore, but the point is that we were already licensed, we were already tokenizing treasuries, money market funds and whatnot. So we thought we'd come up with a product that hopefully can work with a bunch of the BTCFi groups as well. But on our own, we loan dollars to Bitcoin holders that are reinvested in tokenized treasuries or money market funds, which is the real yield component, as in real world component. I wanted to keep the name short. And that's kind of the difference. So I mean, the difference from us as well is the Bitcoin, half of the Bitcoin must be used to generate a stablecoin loan. So investors are giving up half their Bitcoin, but in return, the same day they're getting back the equivalent amount in stable coins that then go to purchase real asset tokens that are owned by the investor. So that's our product design. So yeah, essentially it was just like, let's create more use case for Bitcoin. We all believe it's going to be $100 trillion asset at some point in time, but it's non-productive like the gold issue. And both BTCFi and BTC Real Yields are two options for people to generate yield related to Bitcoin versus, again, not doing anything at all with it, which has been an issue for however 50, 60, 80%, whatever the big number of Bitcoin holders are that. So that's it. Yeah, thanks, Shinty.
Thanks, Grant and Julian. I think Grant put it very simply. Just to think of it as money. People are starting to think of it as money. So automatically, all the usual, financial cases stem from it. And I think Grant mentioned custody as well, which is, I think, a strong component that is quite important to all BTC holders. But custody is a whole other topic, another question that we'll go on to later. And thanks to Julian as well for showing the history of how the whole RWA BTC intersection came about, and also talking a little bit about how the product works. And with that, so zooming out a little bit more for Stacks as well, just for any newcomers joining in to understand, how does Stack exactly enable Bitcoin, programmability while still maintaining security? I think it's one of the core foundations of BTCFi, these two elements. So how does Stack do it? Bring so much use cases, smart contracts, while at the same time being tied to Bitcoin directly. How does it work? Just for a beginner-friendly explanation, maybe. Over to you, Grant.
Yeah, so Stacks is a Bitcoin layer 2, so it's a separate blockchain that sits on top of Bitcoin. So you can kind of think of it as an execution layer on top of Bitcoin. So how it works is on the L1, we call it like pegging out your Bitcoin to the layer 2. So you take your Bitcoin and send it to the Stacks Bitcoin layer 2, and it becomes SBTC. So basically your Bitcoin is held in a single UTXO on the Bitcoin layer 1, and then it creates a token called SBTC on the Stacks layer 2. And now that you have SBTC on Stacks, Stacks has smart contract capability. So you have this essentially a tokenized Bitcoin, one-to-one Bitcoin-backed asset on the Stacks layer, and you can start to do some really interesting things with it, like all the things that smart contracts enable, very simply borrowing and lending without giving up custody. And then once you're done using the Bitcoin on the Stacks layer 2, you send it back to the Bitcoin layer 1. So you essentially burn the SBTC token and then release the Bitcoin layer 1 token on layer 1, and you get the layer 1 Bitcoin back in your wallet. Important about Stacks is that there is Bitcoin finality on the Stacks layer. So if you think about on the Stacks layer, basically every 2 to 5 seconds there's a Stacks block, and so all of these blocks are happening on the Stacks layer. And then every 10 minutes when a Bitcoin block comes up, we kind of take all of the Stacks blocks that happened during that time and hash them down to the Bitcoin layer. And we call this Bitcoin finality. So if you wanted to reverse a Stacks transaction, you would have to reverse a Bitcoin transaction, which we know is extremely hard. So those are kind of the broad overview of the Stacks layer.
Thanks, Grant. I think that put it simple because we all want to understand how it works. So thanks for that. And I think moving from here, so I think you mentioned SBTC already. You send it to become your Stacks layer 2, create a token on SBTC, and then it becomes programmable. So now coming to SBTC, what role does it play in the BTCFi ecosystem? Especially in comparison to other versions of BTC, Wrap, Bitcoin, so many others. So what role does SBTC play? Compared to all of these other versions. And then I think Julian as well, similarly, where does BTC Real Yield fit in this whole BTCFi ecosystem? What main gap does Real Yield fill, and what is it aim to do for the ecosystem? So I think, as usual, start with Grant from the SBTC side. Yeah.
Yeah, so if you've been around the DeFi ecosystems, I'm sure you've seen WBTC or Coinbase's CBBTC. There's now there's Lombard BTC. There's probably, I don't know, like 20 or 30 Bitcoin wrappers at this point. And not here to like dunk on any other wrappers, but there's just like trade-offs with each of these. Wrap BTC, for example, is a yeah, it's basically a multi-sig, and there are owners of the multi-sig, and you're giving up some sort of trust when you are converting your BTC into wrap BTC. Coinbase BTC, a similar kind of trust trust that you're giving up and trusting Coinbase in some way. With Stacks, SBTC is really focused on minimizing that trust. So we have a signer network that is kind of responsible for the SBTC that is wrapped, the wrapped BTC. So in that, we're very public about the signer network. So you can look in the docs of the 14 or 15 organizations that are responsible for signing the transactions to convert the SBTC back to BTC. So this is a very important kind of like security point with SBTC. So there's a really good website called bitcoinlayers.org that is kind of like a neutral party that explains the trade-offs of all of these wrappers. But I think just the point is that there's risk trade-offs, and SBTC is really trying to be transparent about the risks and giving users a decentralized option for a wrapped Bitcoin. And I'll pass it to Julia there if you want to add anything.
Yeah. Well, I think ultimately what we're doing, Stacks, and even other wrapped BTC type related products, is just trying to come up with more use case. I think the kind of the irony of, well, I don't know if it's the irony, the interesting fact about crypto is that if I just check right now, I mean, Bitcoin's the king. Sitting at 2.5 trillion now out of a 4.3 market cap. So it's still 50-60%, and it fluctuates between that and even higher, of the entire market cap of crypto. That being said, and then it's a very distant second Ethereum, and then you've got stable coins of a couple hundred billion. But the point I'm trying to make is that the biggest asset class, it's probably the biggest because it's the simplest. It's the how Bitcoin works, obviously proof of work versus all the other proof of stake programs. All the other coins, because they're a different consensus algorithm structure, they have a yield built into them. Right, you can stake Ethereum, get more Ethereum, stake Solana. Bitcoin doesn't have. I mean, there are some people working on sort of staking Bitcoin, get Bitcoin back, but it hasn't. It's been complex and tough, and so again, so holistically for us, it's just like how do you attach, how do you build a product that works for this asset class that is growing, is huge. It's the so-called pristine digital asset out there. And so I think most of the use cases that are starting to come out is the DeFi use case. It's using it for DeFi. To me, is just the financial services of lending and borrowing and collateralization. And then we use the word DeFi because we do it with altcoins and digital assets versus traditional finance. So, but it's all merging right now. So our mission was to build a business product that helps Bitcoin owners, investors earn real yields, that helps us grow our product. It's another buy side channel. So the original way of buying a real asset token was get some fiat, get a stable coin, buy an RWA. That'll continue probably for a long time. We've added this other channel, which is use your Bitcoin, borrow a stable coin, buy an RWA. So for our community, it's just another force of trying to bring more capital into IXS and grow the TBLs and grow the volume and grow a bigger business. And ultimately, so-called this real kind of institutionalization of Bitcoin that's happening right now, from everything from ETFs to digital asset treasuries. every bank now wanting to sell it. Obviously, a Trump administration that's extremely positive, and obviously regulations around the world that are all supporting Bitcoin's growth. It just looks like this enormous opportunity that's just going to continue to grow over time with dips aside that we want to be part of, and we think it was important, and it was time for us to make a move on it. But our moves were basically led by the BTCFi guys, Stacks and others who have pioneered creating value and use case for Bitcoin outside of just hodling. Thanks, Shinty.
Thanks, Grant. Julian. I think I get the for stacks. I get it's the what other versions out there. It's the trust element. Some risk there. But with stacks, you kind of minimizing that trust with more transparency. And I think we even got some BitcoinLayers.org. We have some information there as well for everyone to check out. So thanks for that. And for Julian, yeah, thanks for breaking down the thought process and how to build like a yield product for Bitcoin. And simply putting it, the BTC Real Yield is simply another channel to get the same RWA. So instead of stablecoin fiat, will be BTC to get the same USD returns. So yep, that was good, neat response. Then yep, next I think we are coming to the yield element. So far we've been talking about programmability, but yield is another huge component of BTC. So just to understand, what is Stacks doing on the BTC yield front? What are some applications that are already being deployed on the yield side? And for Julian as well, it is all about yield, but maybe you can shed more light on how BTC yield actually works in practice. And for those new to it, what are some of the key things that everyone should know about BTC yield, or how are we approaching this a little bit differently on the yield front? But yeah, as usual, I'll pass to Grant first.
Yeah, so in my mind, I break Bitcoin yield into a few categories. First is borrowing and lending. So this is something that's enabled on the Stacks layers by some applications that are built on our layer. Similar to Aave, they are Zest and Granite. And so this is a really simple yield use case where, like Julian's been talking about, you essentially borrow against your Bitcoin using your Bitcoin as collateral, and you borrow stablecoins, and then you take those stable coins and earn a yield on them through treasuries, corporate debt, or some more fancy kind of derivative strategies. So that's like one bucket, using Bitcoin as collateral. The other bucket is on the Stacks layer. They're stacking, so you can stack or stake your STX token and earn Bitcoin yield, about 7 to 10% APY paid in Bitcoin. And so that's another unique feature of the Stacks layer. And then the third is what I call kind of harnessing the volatility of the interest in trading Bitcoin. So Bitcoin has a lot of attention and liquidity from traders. And so because of this interest in Bitcoin, there becomes kind of a structural demand for leverage on Bitcoin. And because of that leverage, traders are willing to pay for leverage on Bitcoin. And this creates this opportunity for basically just structured products built around Bitcoin. So this is things like covered calls or the basis trade. And so this is like an entire new bucket. You might have seen some products released recently that harness this trading activity around Bitcoin, create a yield on it, and then basically deliver that yield to Bitcoin holders. On that front, I think there's less of the on-chain activity that we've been able to harness. A lot of that is more off-chain. But yeah, those are the kind of the buckets: borrowing and lending, stacking or staking, and then these derivatives. Yeah.
Oh, I was getting lost in all of these good thoughts and info that Grant was talking about. Yeah, well, I think. Sorry, Shinty, can you remind me of the exact question again?
Just maybe give us like more insights on how BTC Real Yield works, and yeah.
Oh, right. Okay.
Yeah.
Yeah. So Yeah, so we try to design it with Bitcoin investor first, and obviously with the PTSD from past cycles, all the way back to Mt. Gox, the whole concept of people hacking, scamming, losing their Bitcoin, etc. But for us, the best design that we could come up with was the investors, using the Bitcoin as a collateral, and that's got just, I think it's Grant said, just beginning. So many things are going to happen. So many more places will allow you to do something with it, whether it's BTCFi or our platform, or probably consumer products out there and all this kind of stuff. And so we were like, we want to do what we need to do. So we already spent 5-6 years getting licenses for real asset tokenization. So we want to just find out more ways to help Bitcoin and increase the volume of RWAs on the platform being bought and sold and whatnot. So mentioned just to recap, we loan stable coins to people and 50% LTV, and then they go and invest into real asset tokens. So they are trading half the Bitcoin, but they're getting the value back that day in real world asset tokens, whether it's a tokenized treasury or a tokenized money market fund. I think what we'll see for us, or what we believe is going to happen, is next year there will be daily redemption, daily liquidity, private credit assets. There's a few groups that have been working on this. What's been missing is this daily redemption concept, which is, I think, key to successful digital asset volume trading, etc. So private credit is typically 8, 9, 10, 11, 12% and above returns, but typically 6, maybe even, I don't know what the average is, maybe 12 months, even longer. So people, so what we hope to see coming down sort of as asset choices for yield is probably treasuries will, if things play out, treasuries will drop in value from a percentage. They'll become, although they were the first real world asset token asset class to really get some scale, as that interest rate drops, I think there'll be a lot more demand for higher yielding product. These high yielding credit products have to find some vault liquidity systems, whether they pre-fund them or whatnot, and then we'll start to see people being able to invest their stable coins on our platform at much higher yielding assets, with the ability to have their 1 month, 3 months, 6 months redemption. So yeah, ultimately this is just the kick. This is the start for us. I mean, it's incredible. The initial, we've just been tying up all the loose ends around legalities and whatnot. We're looking to partner with different groups of Bitcoin investors, either individually or like custodians that we've announced, with like Fireblocks and whatnot, more coming down the pipeline, just to try to have the best possible legal compliant way to get people into yields from TradFi, whilst doing the best possible design to give investors comfort that that they will get their Bitcoin back. So that's obviously something that is key to designing all this. And I think, Stacks and others think the same way around the yields and all that are great, but you've got to have a pretty, very, very strong process and uh, either partners or custodian partners or whatnot, to make sure that, it's the best possible light that people then take that step of putting the Bitcoin up to get that yield. Thanks, Shani.
Yes, I think yield is such a crucial aspect that personally I've seen is with DATs, digital asset treasuries as well, where they can't sustain anymore. Seeing the Nakamoto's price drop, with just issuing more shares, like equity leads to dilution and all. So we need some extra strategies around that, some income to build. So that's just one thing, BTC Treasury, but yield is something that's quite crucial. And thanks for Grant. Explained it neatly in like different buckets, lending, borrowing, using Bitcoin as collateral, stacking SDX tokens, and of course the volatility part, derivative structured products. So that was quite useful. You broke it down neatly, and of course Julian as well, key elements of how BTC real yield works, and of course maybe more attention towards a private credit space in terms of yield. So for the asset for RWA products, but yeah, that's pretty good, pretty neat. Then I think the next one from here is also linked to real world asset. I think now to ask Tiger Research, back to Tiger Research, what do you think from Tiger Research's perspective? What is the I think real world asset is already gaining attention in the BTCFi space. But what role do you see RWA tokenization playing in this BTCFi ecosystem? And also, just we haven't heard from Ryan on this whole yield front, so maybe you can shed some light on that as well, Ryan. Over to you. Yeah.
So you mean that like linking to like Bitcoin finance into the RWA side,
Yes.
or
Partner.
okay?
Yeah.
So like Bitcoin is as I told you guys, Bitcoin is kinds of the gold, and we can use that as a collaterals. Like it's like a RWA is just a financial products. It's all need some underlying assets and also some collateral assets. The Bitcoin is one of the trusts and reliable assets that everyone believe now. So it can be the one of the trustable assets that we can use as a collectors when we buying some altable assets as like a US treasuries or new assets. So that's the things we can use the Bitcoin finance into the RWA. And more than I have to think more about how we can link with the Bitcoin finance with the RWA. Um, Maybe Stacks or IX knows about it because you guys build up some products about it.
Yeah. It's all right, right? I think Julian just spoke about it. But thanks anyway. And yeah, I think with that, maybe we'll move on to custody, which is also another part of yield, programmability, and now custody. Um, I think I'll ask both Stacks and Julian as well. How important is custody for Stacks? I think I recently saw that there's been some upgrades on this front from Stacks. So how are you aligning custody models with, I think institutional mainly, they have some requirements, I know like dual control, things like that. So how is Stacks doing on the custody front? And I think same thing for Julian as well. I think custody is a security for, it's been a huge priority in designing the BTC real yield model. So how did IXS, think about custody and protecting BTC in the real yield model? But I think I'll first, as usual, pass it to Grant.
Yeah, custody is a very important part of this entire equation. So Stacks, the Stacks ecosystem is built by Bitcoiners. So we really try to think about the ethos of Bitcoin when everything we do around Stacks. And a big part of the Bitcoin ethos is self-custody. So with the products that we're building, this is a very important part. When you hold SBTC on the Stacks layer, you maintain custody of your asset. You have your keys. It's in your control. So that's a very important part and really kind of like a North Star of what we're doing. That being said, we do have to meet users where they are. And as you were kind of alluding to, a lot of institutions have custody requirements. So we've done integrations with different kind of custody providers across the risk scale to give access to SBTC in different custody models. So some examples of this are like Fortify, which is it's an MPC wallet platform that a lot of institutions use to access DeFi in kind of a more secure way. So you can access some of the products on the Stacks layer via Fortify. And then kind of on the other side of the risk perspective, we also have integrations with BitGo and Hex Trust, and these are custodial solutions. So a lot of these institutions kind of are more comfortable with custody solutions like BitGo. So we're also working on those integrations. And then the final part is we announced the Satoshi upgrades recently, which are kind of a self-custodial model upgrade to SBTC. And so this is kind of focusing on making SBTC self-custodial on the layer one. But that is in research and production right now.
Yeah, I mean, I'll just jump in quickly. Yeah, obviously custody security is a number one probably thought process for anyone should be a number one thought process for anyone trying to build stuff in crypto. RWA is very different from crypto because the real world assets exist off chain. So we don't have the same intensity and risk profile of someone stealing your private keys. And because, you know, the Bitcoin is on chain only, being able to take ownership of the asset and sell it and steal the goods. So with us, we came at it with a very serious mindset. We work with the best custodians in the world. So they have essentially, at least from our perspective, they have, you know, the top custodian solutions out there, multi-sigs, escrow type agreements, et cetera, et cetera. So we've announced one with Firebox. We've got two more announcements. Well, there will be when the time is right. Yeah, that was the goal, is that they hold already very large amounts of Bitcoin. They're looking to make their businesses more useful. They're offering to make more services available to their clients. As we know, huge chunks of that Bitcoin is sitting there idle and has been for a long time. So we could bring, I guess, comfort to the Bitcoin holders that, you know, if they enter this product with us, it's all being done by the same custodian, by their custodian. Right. So that's how we think about it. And then, you know, we rely on these you know, world leading custody providers. We're not a custodian. We don't want to be a custodian. We'll never want anything to do with that side of things, because I think that it's important how sensitive this and how important it is for this asset class to have the best guys doing it. And that's how it works from our side of things. Thanks, Cynthia.
Yep. I think what I can get consistently from Grant and Julian is that it's, you know, through integrations with custody providers, MPC wallet platforms, and we can, you know, bring comfort that it's being done by the custody partners. So okay, so mainly strong custody partnerships, I would say, is the answer to this. Okay. Then, yep, I think the next one is, I think, for, okay, zooming out a little bit for Tiger Research. Other than custody, of course, what are some key aspects that you think are, from your research, you know, that is essential for the institutional side, you know, adoption of BTC? Other than, you know, one thing is custody, what are some other, you know, requirements, aspects that you think is crucial for the institutional adoption?
Okay. I worked at the finance institutions before, so I might know well about their needs. First of all, the compliance, like the regulation compliance, is non-negotiable for the institutions. Institution cannot touch anything without the clear legal frameworks. That's why platform like BounceBit and IX getting more transaction before, like INX has some license under the Bahama and no clients. So this is kinds of the like powerful license systems getting more transactions from intuitions. So yeah, that's the first things, and the second things is like finally, anyway, the BTCFi is about the yield, so yield must be sustainable, and explainable. Intuitions once yield they can explain to their boards or their customers. So like 3 to 5 from the Maple Finance or IX, some like around the 5% can be explainable, but at the same time, we need to keep their yields forever to like making explainable for the investors. So that's the two things: the compliance and the sustainable yield we have to care about.
Thanks, Ryan. Yeah. June, actually, would you want to shed some light on, because I heard compliance, and I think that's a key focus for us. We dedicate a lot of efforts to making sure that we're legally compliant with our structures. So, Julian, do you want to quickly add anything on that?
Yeah. Well, we were and the pros and cons, or the good and the bad of being a securities licensed entity. We have to follow rules to get our licenses. So, yeah, for us, you know, if you want to go and buy and sell a security or a real asset security token, predominantly meant to be on a licensed venue. So that's meant, you know, for us to give our clients and our partners that confidence that, you know, once they borrow against their Bitcoin, they're buying an RWA token from a group that is regulated. There's oversight, there's due diligence done on assets, due diligence done on investors.
not all investments are going to work out, but ideally it's not a scam and there's something real there. So that's and then we report back every weekday, etc., back to where we have to. I think thinking about the different options out there, I think there's a lot of people that are happy with BTCFi. I think there's a lot of people that will be excited by Bitcoin real yields. I think we just touched on the digital asset treasury companies. I think the interesting thing that we've learned from Bitcoin Vegas, Bitcoin Hong Kong, and Tokens 049, speaking to many of these groups, for those that aren't aware, there's 160, or there was 3 weeks ago, there was 160 public listed companies doing the Bitcoin treasury model, replicating Michael Saylor's strategy. So that's 3 weeks ago. I think my team met 30 different companies that are looking to launch Bitcoin digital asset treasuries. Forget all the other coins. So it's a thing. It's a big thing. What's happened now that's interesting, and this will play to the benefit of both Stacks and IXS, is that raising money to list a public company to buy Bitcoin and do nothing, I don't think that's good enough anymore. I think there's way too much competition. If you think about a company's goal is to, and specifically a public company, it's to bring value, generate value for their shareholders. If you have an asset and if your entire business model owns Bitcoin, and there are options to run yield strategies, you're going to be forced to take them even if you weren't originally planning to do that. Because if I have a digital asset treasury company and I have 100 Bitcoin, and Shinty has a digital asset treasury, she has 100 Bitcoin, she's going to do nothing but hodl. And I'm saying you can get Stacks yields at X%, or you can get IXS yields at Y%. You're going to take, and I go do this, and we've got track records and all works out. As a public company, all the shareholders will eventually start leaving the Bitcoin holding companies and looking for the Bitcoin digital asset treasuries that are yield generating, because it just makes sense. If you can, the more Bitcoin you have, the more opportunity cost you have when you're not earning yield. 5% on $100 is $5. 5% on $1 billion is like $50 million. All right. So it starts to really add up. So I think, it's a huge group of Bitcoin investors that are the most driven for yield, because they come from Wall Street and they're being demanded to drive and create value, or people will jump ship and go to other digital asset treasury Bitcoin companies that are doing yield structures. So I think that's all very bullish for Bitcoin yield seekers or platforms.
Yep. Thanks, Julian, and Ryan as well. Yeah. So I think I pass it to Julian because I think legal forefront. It's a forefront of everything we do. We always consider legal, dedicate a lot of time and efforts, and I think Julian already mentioned we have submissions to regulators. So that is, I think, a quite crucial aspect in terms of institutional side for BTCFi, the legal side of things, and of course, I think yield generation with DATs that Julian just mentioned. I think many are starting to realize that accumulation alone is not enough, and I think the ones that will really stand out is the ones that are having yield, other innovative things that really makes it attractive for investors rather than just holding Bitcoin. So yep, thanks for joining, Ryan. And then I think we're coming closer to the end. So I guess from now is just what's next for Stacks, and Julian and IXS BTC Real Yield side, what are some UX improvements? What are you prioritizing next? What can we expect to see soon from Stacks? Yep, I think I'll pass it to Grant.
Yeah,
Yep.
yeah. Thanks so much for having me today. This is a lot of fun. So definitely follow Stacks on X for some updates, but I'll give you a quick sneak peek on some things in the pipeline. So one is dual stacking, which is coming up soon. So currently we have stacking where you can stack your STX and earn Bitcoin yield. And we're about to release a new model called dual stacking, where you'll be able to stake STX and BTC to earn BTC yield. Kind of giving, we've seen this from users where they're interested in staking their Bitcoin to earn Bitcoin yield. So that is unique to this Stacks layer, which will be able to enable this interesting product. So that's coming up, and then there's also an interesting BTC yield vault that will be built on the Stacks layer, which will be interesting using some of the borrowing and lending protocols in the Stacks ecosystem. So it's all few things coming up, but yeah, Stacks is just focused on Bitcoin yield, and we're hoping we can work with IXS in the future to build something cool. But thanks so much for having me today.
Yeah, looking forward to that. We're still working out the ins and outs and a lot of these products that look simple on the outsides, because there was an insane amount of development to get them to that point, which you know, all the best designs are kind of the hardest work. Yeah, for us, just the most interesting thing will be adding new custodian partners, because that ultimately adds a bunch of new Bitcoin. So that's volume stuff for us. And then I think on the asset side, I think that the growth of and the piecing together of the private credit and all the different types of private credit as yield generating assets coming will make the attractiveness of our product even more. It's nice to the fact that Bitcoin is a zero yield product, right? You could borrow and invest in a treasury at 4 or 5%, which is fine. It just doesn't blow the lights out. It's a lot higher than zero. That's why Tether and Circle make so much money, but that's a different story. But if it was 10, 15, 20 with big brand name institutions behind it, that becomes a real interesting value proposition. So that they're the main things from us, and a bunch of other things. But yeah, thanks again for hosting, Shinty. I think we've hit the hour mark, and thanks to Grant, Ryan, and everyone else for joining us. I hope that was really, really useful. But Ryan, I guess we'll give it to you to give us a final wrap up on maybe you're in the research game. So what's your prediction, even maybe just for the rest of the year related to BTCFi?
As I keep saying, like, I hoping the is either not the Ethereum, the ETF or the DAT companies choose one or several BTCFi products in this year, and I'm pretty sure that this can be in like 3 or 4 months. So I hope like INX and Stacks, which is the OG in the BTCFi, can have more, making some more hype on the BTCFi ecosystem with the in this ecosystem. So, and for the Tiger research, we will support expanding more area about the BTCFi systems for the research side. And thank you for having me on here. And I hope everyone knowing about the BTCFi on this time and having more insights about it.
All right, great. Thanks everyone. Thanks for joining, guys. Thanks, Shinty. Did a great job today. Did you want to close us out?
I think you've done it mostly, but yeah, I think that sums up yeah,
Awesome.
most of the topics, custody yield, yeah, everything that comes around BTCFi that everyone should know. Yeah.
All right. And make sure you guys follow Tiger Research, Stacks, and IXS. You're probably already there. And we'll speak to you guys soon. Thanks for taking your time out of your day. Thanks, everyone.
Thank you, everyone.
Thanks all.
Thanks.